obviously, a blowout report. I think everybody's expectations were sky high, and like Nvidia took it to the moon. I mean, it just really went high. What was the catalyst to raise your expectations, your price target? What did you hear that led to that? Because a lot of this was kind of priced in. We were kind of expecting Nvidia to beat, right?
Right. I would say, well, first of all, obviously the numbers went up, right? So they did beat. You said about, investor expectations were elevated, but, consensus expectations were lower than where the numbers came in. So
there were whisper numbers.
There were whisper numbers, and I would say yes. And in
you
many
hear
ways,
them. You hear the whispers.
We hear the whisper numbers, and Nvidia met the whisper numbers. Let's put it that way. But our numbers went up, and with the numbers going up, keeping the same multiple on our new earnings estimate, our price target went up. Now, having said that, there were some concerns going into the quarter about sustainability of demand. You've got a product transition. This is a transition year. And NVIDIA answered a lot of those concerns. The demand on the existing Hopper architecture remains very strong, is expected to remain strong. There's a new version of the Hopper coming out, H200. NVIDIA talked about demand exceeding supply through the rest of this year on H200. And then when you look ahead, Blackwell's around the corner, which is a new architecture. And with all of that in mind, demand potentially exceeding supply well into 2025. The numbers are going up, and the outlook looks quite strong, medium term.
I just want to be clear. When you're talking about the product transition, there were some concerns about a quote-unquote air pocket. That some companies would hold off on buying. So you feel like they addressed all those concerns?
I do. And one of the things NVIDIA talked about on the call, which I think was really interesting, is about AI monetization now. So if you can make money on AI now, which you can, using NVIDIA GPUs, companies, service providers are doing that. And the other thing, Frank, that was really interesting to me was that there's a broadening of the spend, I think, on AI. So NVIDIA talked about enterprise customers coming in, consumer internet companies coming in, of course, the big cloud service providers. We've all seen the CapEx numbers continuing to go up. And so there's a broad-based demand.
Right. They also had healthcare companies. They threw those in there, too. I'm going to talk to you guys about that in just a minute. James, I'm going to come over to you. You're an NVIDIA investor. We were just showing the revenue chart. I mean, that's incredible, just that ramp up when it comes to revenue. I also want to talk to you about valuation. So about a year ago, NVIDIA was trading at about 61 times forward earnings. Now it's about 41 times. As an investor, with this kind of massive growth, is this actually cheap? Are you looking to maybe even get even deeper into NVIDIA now?
Well, it's our biggest position, so I'm not sure how much bigger we can get. But that
we weren't sure how much bigger NVIDIA could get. So
that's fair. That's fair. But I mean, we're playing the entire data center infrastructure build out. So from that standpoint, our exposure is significantly overweight relative to the indices. That being said, to your question on NVIDIA's valuation, yes, so long as the earnings continue to grow in the manner in which they have, we see that valuation justified. So we'll continue to stick with it for the foreseeable future. The only questions we have really are around what do the economics of the business look like as the new chips and the next stage of chips enter into the fold. Do they come in at lower margins and what does that earnings path look like? But that being said, all the things that they said on the call, we think that coming away from this, the confidence in estimates is only bolstered and strengthened, at least for the next 12 to 18 months. So I think that should help keep the valuation intact and continue the momentum in the stock for sure.
We often talk about this company kind of being really focused on data centers, but in the release, they said they're seeing a broadening out of their customer base. In your mind, does that change your outlook on the company? Of course, in a positive way. Does it kind of raise your expectations for not only the next quarter, but going forward, the fact that they're seeing so many more different types of companies looking to utilize their chips? And they mentioned healthcare, which I thought was really interesting. Earlier this week, we had Sanofi on. They're partnering with OpenAI. So we're seeing just a broadening out of what I would call, I guess, AI use cases.
Yeah, I mean, I think obviously that underscores the bullishness for NVIDIA, but I think what it does most of all is solidifies the fact that this movement toward AI and digitization and of services will continue to happen at an accelerating rate. So you have a target-rich environment of companies that can capitalize on that. NVIDIA, of course, being the fuel to that fire via their chips. So we take it. That being said, as a very bullish stance on the entire Gen AI transition.
I also thought it was interesting they mentioned sovereign nations. They went out their way to say that. When I was in London, talked to a couple companies about the build out of the sovereign cloud across Europe. So that could be an interesting story going forward Ruben, I want to come back to you. As you look at this stock, increasing the dividend by 150%. So that's a popping number, but in reality, after the split, it's going to be a 1 cent dividend per share. Is that meaningful? Does that change anything about this stock and how you view it?
It's going in the right direction, and it comes back to cash flows. Cash flow numbers continue to go up, and I think the company, is doing the right thing. Shareholder allocation, philosophy, I think, is going in the right path. Nvidia has done some small tuck-in acquisitions, and I think they're going to continue to bolster the software part of it. Something that James just said is really important. The margin structure of the company has been going up and to the right. Maybe it comes back down a little bit with the new product family that launches next year. But there's a big software aspect to Nvidia's, kind of longer-term strategy, and I think that is really interesting as you think about the multiple, the valuation, and margin structure of the company. So up and to the right, in the right direction.
Any holes in this report? I mean, I have to ask you, any questions, anything that's like a bad mark when you look at these numbers?
I really couldn't find anything to nitpick.
Really?
Like I said, we had some concerns going in, and Nvidia, I think, answered a lot of the concerns. I guess the one concern that came up last night from some investors is, what do you think about China? Nvidia did discuss China on the call a little bit, and still unclear. It's going to be a competitive market, but as you said, there's a lot of strength elsewhere, and I think we're still in the very early innings of AI investment.
So James, as an investor, I'm sure you're happy about the dividend, even though it's only going to be 1 penny a share. Asking the same question to you: any holes in this? Anything that raises even an eyebrow of concern?
No, not at all. I mean, I would echo the China, but I mean, we're staying away from China altogether. Obviously Nvidia is somewhat exposed, but aside from that, I think it's great, and obviously the dividend boost. But I think the stock split is also a really big deal. That obviously no economic implications, but will open up even a bigger pool of retail investors.
We keep saying that, but I mean, stocks seem to go higher after the split. We always say it doesn't mean anything, but it means something to somebody.